What if I told you? One of America's most loved retailers has made thousands of long-term investors incredibly wealthy. Even though it rarely has flashy product launches, doesn't dominate AI headlines, and isn't the fastest growing company on Wall Street. That company is Costco. But here's the question investors are asking in 2026. Is Costco stock still worth buying, or has it become too expensive? Stay until the end, because one surprising fact about Costco's business model explains why many investors are willing to pay a premium for this stock. Why Costco is different. When most people think about retail, they think about selling products. Costco is different. Its biggest competitive advantage isn't just low prices. It's the membership model. Millions of Americans willingly pay an annual membership fee just to shop there. That creates a steady stream of recurring revenue before customers even buy their first item. It's one of the reasons many investors view Costco as more than just another retailer. The membership advantage. Imagine owning a business where customers pay you simply for the privilege of shopping. That's essentially what Costco has built. Membership fees help support the business while allowing Costco to keep product markups relatively low. This encourages customer loyalty and repeat visits. Many shoppers renew their memberships year after year, creating a business model that investors often value for its consistency. More than cheap prices. Costco doesn't try to stock everything. Instead, it offers a carefully selected range of products at competitive prices. That simpler approach helps streamline operations and inventory management. The company has also built a reputation for customer service and value, leading many shoppers to make Costco part of their regular routine. For long-term investors, loyal customers can be just as valuable as rapid expansion. Why investors like Costco? Costco isn't usually the fastest-growing stock. But many investors appreciate its consistency. The company has demonstrated an ability to attract loyal members, expand its warehouse network, and generate strong cash flow over time. It has also become known for disciplined management rather than chasing every new trend. That steady approach is one reason Costco has remained on the watchlist of many long-term investors. The big question. So if Costco is such a great business, why do some investors hesitate to buy the stock? The answer has very little to do with the company itself, and almost everything to do with its valuation. Can an outstanding business ever become too expensive? That's exactly what we'll explore next. Is Costco stock too expensive? Now let's answer the biggest question. Costco is widely respected as a high-quality business. But even great companies can trade at prices that leave little room for disappointment. That's why some investors hesitate. They're not questioning Costco's business. They're questioning the price they're being asked to pay. Supporters argue that exceptional businesses often deserve premium valuations because of their consistency, loyal customer base, and long-term growth potential. Others prefer to wait for market pullbacks before investing. The key lesson: a great company doesn't automatically mean a great buying opportunity at every price. The risks investors should know: no investment is risk-free. Costco faces competition from retailers like Walmart, Amazon, Target, and warehouse clubs. Consumer spending can slow during economic downturns. Higher operating costs, wage inflation, or supply chain challenges can also pressure profits. And because expectations for Costco are often high, quarterly results that merely meet expectations, not exceed them, can still disappoint the market. That's why it's important to focus on the business over years, not weeks. Should beginners buy Costco? If you're new to investing, avoid putting all your money into a single stock. Many experienced investors start with broad market ETFs to build a diversified foundation. Then they gradually add high-quality companies like Costco as long-term holdings. This approach gives you exposure to one outstanding business while reducing the risk of relying on a single company. Diversification remains one of the most effective ways to manage uncertainty. The biggest lesson from Costco. Here's what makes Costco fascinating. It didn't become successful by chasing every trend. It built a loyal customer base. It focused on operational discipline. It created recurring membership revenue, and it consistently executed its strategy over many years. For long-term investors, that's an important reminder. Outstanding returns often come from outstanding businesses that stay focused on what they do best. Final verdict: so, Is Costco stock still worth buying in 2026? If you believe Americans will continue valuing convenience, competitive pricing, and membership-based shopping, Costco remains a company worth researching. Will it outperform every stock? No one can say with certainty. But its combination of customer loyalty, recurring membership income, disciplined management, and long-term business execution continues to make it one of the most closely watched retail companies in the market. The most successful investors don't simply buy popular stocks. They buy businesses they understand. Stay patient. Remain diversified. And think in years instead of days. If you enjoyed this video, subscribe to Wall Street Pulse for more analysis on Costco stock, U.S. stocks, ETFs, dividend investing, and long-term wealth building. And in the next video, we'll compare Costco versus Walmart stock to answer a question every retail investor wants to know. Which stock has the better long-term investment potential?